Alrighty, so there have been quite a few videos on the topic of 50-year mortgage. Unfortunately, a lot of videos are at least somewhat politically related. Everything politicians do nowadays is politically weighted, unfortunately, by a somewhat polarized society. Regardless, though, I would like to very quickly go over this because it does impact people or could impact people in their researching loans and if they're going to buy a home in the near future, if this does end up happening. So we're just going to very quickly go over the pros and cons of the 50-year mortgage, 50-year loan concept. Let's look at it objectively as an economic concept, as a concept of, is this good for you? Is this bad for you? Once again, though, I am Noah Cochran, a real estate agent here in Columbia, Missouri, just out here trying to provide as much information to folks who are looking to buy, sell, relocate, anything like that. Always feel free to hit me up. I would love to help find information or help you all out. But without further ado, let's jump right into the 50-year mortgage. Now, there's one very obvious, very clear pro. This will massively lower your monthly payment. Now, that sounds great, right? That means more affordability, technically. More affordability. We'll get into why that may not be the case in a second, but it seems like it means more affordability because lower monthly payment. If you are an investor, this is actually very good for you. In fact, you can take this as a negative or a positive depending on where you are in life. If you are more of a person like me, maybe not a big, powerful, wealthy investor, and you're just wanting to own your own home, this might be looked at as a negative because this will help investors buy up even more properties. Why is that? Very simple. Because the way it works for these investors is they buy a home and they use the monthly rent income to pay off the home, their monthly payment, and make a little monthly income off each unit of that apartment. So, in this 50-year mortgage instance, this would be good for them because they don't really care. A lot of these investors don't really care a whole lot about debt. As long as they're bringing in income and their tenants are paying off the home, that's good for them. So they can just take out 50-year mortgages, buy even more properties because they now have more disposable income because they're making more per month because their lower monthly payment makes it much lower than the rents that they'll be making off each apartment or home. So if you're an investor, this might actually be great for you. Now, again, as we go through the cons, there are some cons even for investors, but definitely some pros for investors. However, for the average person, despite the apparent more affordability per month and cheaper monthly payment, there are some very, very big cons that in fact, somewhat make the pros quite moot. So the first and obvious one everyone's going to talk about is the massively higher total interest payment. So while your lower monthly payment might be cheaper, let's say 50 years goes by, or even just 20 of those 50 years, you already have paid a massive amount more in interest. Now, people have made videos going over the exact numbers. I'm not going to bother with that here, but suffice it to say, these numbers are going to be huge. Like, you are going to end up losing hundreds of thousands more dollars, most likely, depending on how expensive your house is. But the more expensive your house is, the more you're going to be losing. And what this really is, if we really step back and look at it, unfortunately, is you are somewhat enslaving yourself to this payment program. Yes, part of that is just due to the pure length of the mortgage of the loan, but also the concept of you're slowly paying it off over time. And that leads me into my next point is, why not do a 100-year loan? If we're going to do a 50-year loan, why can't we do a 100-year loan? A 200-year loan? Then your monthly payment is basically nothing. Why can't we do that? That seems like it just breaks the bank. If everyone can get a 200-year loan, then everyone can be paying a monthly, super cheap monthly payment. Everything's cheap. Everything's fixed. The world housing crisis is fixed, right? Yes, we're never really going to own the home, but who cares, right? Because we get a monthly cheap payment. We can live in actually nice homes now because we can just take out a cheap little loan with a tiny little down payment, pay a cheap monthly cost, and boomity bop. We can now live in a $1 million house with a cheap monthly payment because we got a 150-year loan. Well, here's the problem. And the problem with, say, a 100-year loan reveals the true problem with a 50-year loan. And that is this. When we make mortgages longer, right, lower the monthly payments drastically, whether it be 50, whether we go up to 100, when we do this, what happens is it artificially, drastically increases the demand. And not only the general demand, right? Just for a roof over your head kind of demand, but the demand for, oh, wait, I can buy a $500,000 house and I can now afford it easily because my monthly payment is half of what it used to be, or 10 times less than it used to be, whatever it may be. So what happens when this demand is artificially, essentially by the federal government, by changing or adding new mortgage loan types, is artificially massively hiked up? What happens to the housing market? Supply is completely beaten out by demand, especially in price ranges that people really can't or really shouldn't, honestly, be able to afford without the concept of this enslavement to their house. So what will happen is people will enslave themselves to the house, to the payment, with the concept of it doesn't really matter because I get such cheap monthly payment. For that matter, I could just resell it. Well, here's the problem. When we have all this demand flooding in, guess what happens to housing prices? That's right, they go way up. So not only do you now have this long mortgage that already is going to have much more interest payments, but most likely demand is going to drive price way up, which is going to make your interest payments even more massive and actually end up doing this. It'll end up driving your monthly payment back up. So if we had a big long mortgage concept, whether it be 50 or 100 a year, and obviously the longer the mortgage, the worse this would be. But the reason I bring up the concept of the 100-year mortgage is because it really exemplifies and really showcases the issues that may not be as noticeable in the just 20-year increase that a 50-year would be. But it's the same concept of this. Slower monthly payments. Demand floods the market, artificial demand that really even shouldn't be there. People then are okay, a lot of people are okay with enslaving themselves to the house without the recognition that what actually ends up happening is they're going to end up paying, especially as time goes by, way more money for that house because of all the competition and all the demand, which ends up making their monthly payment higher. Maybe not as high as it used to be, but still higher, and massively increases their total interest payment. So, quite frankly, and again, this is my opinion, to be clear, I am not an economics market expert by any means. I work in real estate. I know how to write up a contract, how to make a deal, how to negotiate, how to find good deals for folks, and work with my local market. I do not understand all the intricacies of the mortgage world, of all the finances, all the economy, all that. But just looking at this in a very logical, analytical way, to me, this is a very dangerous concept of the 50-year mortgage because not only, again, are you enslaving yourself to this loan, because some people might be fine with that, let's be honest. You pass the debt along to your future generations, some people may not have a problem with that. That's their prerogative. But what people have to understand is that this can actually destroy markets because what will happen? Let's do a 50. Well, why, if we can do a 50, the president's like, oh yeah, let's do 50. Well, let's do a 75. Well, maybe we can just do 100. Everyone's paying cheap. Prices way up, which then and eventually will drive up monthly payments back up. So people are back to paying relatively high monthly payments, and then they have much higher interest, and they're essentially at that point completely enslaved to the home. If they can resell it, which they probably could, all that really happens is that they lost a ton of money on that home. That's all. So we're now in this downward spiral of losing money, of enslavement to a payment, of driving prices up. It literally, in my opinion, and again, maybe I'm missing points and different nuances. There could be nuances to this. But in general, I think this is a terrible direction to go for the home purchasing industry. I'm not saying homes are cheap. Listen, I'm struggling like everyone else is to be able to afford things, to be able to afford a home, to own and live in. I'm not saying things are great. The economy's not great. But this is not the way to fix it. This will artificially try to fix things and will end up making it much worse in the long run. But that's just my 2 cents on the 50-year mortgage concept. If y'all have experience or any knowledge on this that I'm missing or just thoughts that you want to share, I'd love to hear that in the comments below. But again, I'm just an agent here in Columbia trying to help people out, talking about the topics that assail the real estate market and home buyers and sellers and just people trying to live their life in their own local community. Again, I would always love to hear from you. Leave a comment, shoot me a text, give me a call. My number's always available. I would always love to help. But until next time, folks, y'all have a blessed one.